So we're going to talk about a stock that I've kind of had a love-hate relationship with over the past year or so, Lemonade, ticker symbol LMND. They're the insurance disruptor. Before we get into it, please click subscribe to my channel and take a minute to check out the link on your screen. You'll see the top 10 stocks right now from my sponsor, The Motley Fool. So Lemonade's earnings look pretty solid in a lot of ways, especially when it comes to growth of the business. The company's in-force premium rose by 64% year over year to about $625 million. Even without the Metro Mile acquisition, which added a lot, it would still be up 38% year over year. Pretty impressive considering the environment. Lemonade has more than 1.8 million customers right now. That's up 27% from last year. And gross earned premium for the quarter was up 69% year over year. Its annual dollar retention was 86%, meaning it's doing a great job of keeping its customers happy and with the company. And one really interesting thing to note, this is the first year where Lemonade had all five of its major products in the market. That's renters, homeowners, life insurance, car insurance, and pet insurance. The more it can cross sell those, the better its retention should get. And Illinois is a great example. Why Illinois? It's the one state where Lemonade had all five of its products available for the entire year of 2022. And you could just see that its retention rate is 95% compared to 86% in the country as a whole. So that could be a kind of a preview of what's happening or what's going to happen as Lemonade continues to roll out all of its products nationwide. For example, the car insurance is only in a few states so far. They're still in the early stages of rolling that out, but it's by far the most promising part of the business. Um, the negative to Lemonade so far has been that it can't get its underwriting correct in the sense that it shoots for a 75% loss ratio or lower, meaning that when it takes in premiums, it aims to pay out 75% or less of that to cover claims. In the fourth quarter, the loss ratio was 89%. That doesn't leave a lot left. That leaves 11% to cover its administrative expenses and hopefully turn a profit. It did not turn a profit. It needs at the 75% target is where Lemonade feels it could be consistently profitable. Now, that 89% loss ratio is an improvement. It was 96% the same quarter a year ago. And the company says that this is mainly due to its newer products, say pet insurance, car insurance, that really haven't had a time to develop yet in the company's numbers. So, as the current cohorts of customers age, Lemonade predicts that the loss ratio will continue to gravitate toward or hopefully below that 75% range. It's not there yet. And as a result, the company is losing money. Posted a net loss of a little over $63 million in the fourth quarter. That's a better net loss than in the fourth quarter of last year. And the company feels like its losses have peaked, but it's still losing money pretty rapidly. The growth rate is great, but this isn't 2 years ago when money was very cheap to get and there was just kind of an infinite amount for speculation. Now investors expect profit, which is why Lemonade stock is beaten down to the point where it is. So looking forward, I mentioned Lemonade expects that its losses have peaked, but it's still expecting pretty good losses this coming year. It's expecting an adjusted EBITDA loss in the range of 240 to 245 million dollars. That's still a lot of money. The company has about a little over $1 billion of cash on its balance sheet, so it has a lot of runway. And Lemonade previously said earlier in 2022 that it should be able to achieve profitability without ever having to raise more capital. With that kind of a loss rate, that's still a very big if. So I'm not totally convinced. I think that the company has a lot it needs to get right before it can even hope to be profitable. Losses are just one of them. It needs to be able to really roll the car insurance product out. It needs to get stock-based compensation under control. It's expecting $60 million in stock-based compensation in 2023. That's a lot for a company worth roughly $1 billion. So it really needs to get that have a long-term plan to keep money from flowing out the door. So all in all, I'm pretty happy with Lemonade's quarter. I'm not selling my shares yet, but remains a very speculative investment, and it's one that I'm not going to have make up any more than a small position in my portfolio. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.